Hello everybody, this is Jeff Gibby back in the MetaStock studio. I wanted to sit down today and record a special video on the Forecaster. A lot of you may or may not be familiar with the Forecaster. I've talked to a lot of MetaStock users and people that are just kind of a little bit confused about the Forecaster. So I wanted to spend a few minutes kind of explaining exactly what the Forecaster was and how I use it and what it's actually doing. As you may not know, Forecaster got a huge overhaul in this last version of MetaStock and has a lot of really cool functionality. The purpose of this video is to kind of give you a very good, succinct overview of what the Forecaster is, what it's doing, what it's not doing, and the new functionality as well. So let's go ahead and get started. As you know, today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins, and is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of their software, any trading strategies, or any information provided in connection with the company. Today's class is going to be very simple, very short, and very to the point. We're going to give really a class on the Forecaster. I'm going to show you really kind of what the Forecaster is, what we're trying to do with it, the statistical overlays, how the math is calculated. I'm going to show you the new features, which include like drawing your own patterns, forecasting patterns directly from a chart. And so let's go ahead and get underway. Okay, I do want to be specific. We're not going to talk a lot about all of the functionality of MetaStock. I wanted to get really focused with this video. My plan is to actually create a series of videos that you can watch, each that are a few minutes long, that kind of cover different strategies and different markets and different parts of the program. Give you a little bit of, in case you're not familiar with MetaStock. MetaStock's a huge brand. We've been in business since 1982, probably the most established, most successful brand out there. And we're really proud of what we've been able to do with it, proud of the ability for people to use MetaStock and have better trading decisions, and proud of the fact that we've actually been rated #1 in Stocks and Commodities magazines for 23 years in a row. So that's about what we're going to show you in PowerPoint. This is going to be a very interactive software demo in the software, and I certainly wouldn't trade without MetaStock, and I'm going to kind of show you how I use the Forecaster and what it does. So let's go ahead and get right into MetaStock, and more specifically into the MetaStock Forecaster. I've opened up a chart for the purpose of this demo. I'm going to be using DIA, which is an ETF in the US that follows the Dow Jones Industrial Average. And what I want to do first of all is, you'll notice it's a little bit different because of what we're doing. It's its whole separate charting engine within MetaStock. Now, when you initially load up the Forecaster, what it's going to do is it's going to look at different technical events. Like technical events could be like a Bollinger breakdown or a Bollinger breakout or a Bollinger breakup or a candlestick pattern or a 52-week high, 52-week low. It could be a moving average cross of some sort. It could even be like a 52-week high or 52-week low. Now, what we're trying to do is not really what we're trying to do with the Forecaster is say, is there a statistical likelihood of price change? And what does that look like after any of these given events? But these are the events that we're looking at. There's around 42 or 50 that are built in the program. And with the new version of 14, we actually have the ability to draw our own patterns, which I'll get into in a minute. So every time you open up the Forecaster will go and perform some statistical analysis on all of these events. And then we have the ability to do our analysis on what those events look like. So let me go back into the Forecast tab. And I've got this sorted by, with 14 you have the ability to sort these patterns. So you can sort them by the highest profit potential, the ones that are most accurate currently, the ones that are most pronounced, the ones that are most distinct, the most recent events. And I've just got it sorted right now based on the most recent events. That way I can kind of see what's really kind of happened lately in the market. Now, the pattern that I've got selected down here is the candlestick big white pattern, which just happened. Here we have an event marker. And you'll notice we have event markers that show up every time this event happens on a chart. I want to be very clear. I try and be very clear with people. These are not buy-sell signals. This is just telling you exactly when the event happened on the chart. So every time this happens, what the program does is it starts its statistical analysis, which we'll get into in a minute. Right here, we've got the stochastic's positive divergence, and then these are different events that have happened in order of recency. So we just had a 310 cross down. The price just crossed down below its 50-day moving average. Every time I click on one of these patterns, you'll notice the event markers are going to change. We're statistically analyzing the event. Okay? Hopefully that makes sense. So I'm going to go back up to this stochastic's positive divergence. I'm going to just bring up this statistical report. Now, this is basically a patent pending application, and but this will give you a good idea of what some of the math that we're looking at when we do a forecast cloud. So for example, in this particular case, the stochastic positive divergence happened 9 times within the last 1,800 days. And on average, the event occurs every 222 days. The recent frequency of the event appears to be decreasing slightly. The shortest gap between the patterns is 5 days, and the longest gap is 404 days. Statistically, 7 days, and this is where the math comes into effect. 7 days after the event occurs with a probability of 95%, the closing price appears to be about 1.05% higher with a standard deviation of 0.0 whatever. 14 days after the event, with a 95% probability, it appears to be 2% higher. 30 days after the event occurs, and then so on and so on and so on. What we're looking at is, what is the likely price outcome? Is there a statistical measurement? So when I have a positive divergent on my chart, how statistically likely is that to happen? And we don't just use statistics. There are some things that are part of our proprietary formula that's part of our patent application. But this gives you a good idea. We're saying, okay, when this pattern happens, what does the chart do? What is the resulting price behavior? And is that indicative? What's the probability of price movement after that? The end result of that, and I'm just going to go ahead and decrease this a bit. I've talked about that as much as I want to. But the end result of that is what we call our forecast cloud. So if I click on right here, the forecast cloud, this is going to show us a heat map or a graphic that gives us a likely price movement afterwards. So over here, I have a scale. You can see 30 to 100% with bright yellow being 95 to 100, orange being 90. Right here where we've got blues, that's not very probable statistically, but we're giving that a 30 to 50% probability over. But as it gets hotter, here we've got a very, very red area, and that actually gives us a 70 to a 90% depending on exactly what shade of red we're looking at. So we get a kind of a feel for how the stock is probably going to move, or how it statistically has moved in the past. And the brighter the heat map, the more likely it is to be within that shaded area. Okay? If I click over here on the price and volume and event markers again, now what I can do is I can actually overlay that forecast cloud on my chart by clicking on one of the event markers. Now if I click on the last event, it's going to be very, very similar in nature to our forecast cloud that we just saw, because this is using all of the available data. So right here is where the event happened. And past that, we've actually been very, very good at staying right within that high probability zone. And even in this kind of lower 60 to 70% range here, or I'm sorry, 50 to 60%, as we make our way up to the 60% probability range. What we're saying basically on this chart is based on our mathematical calculations between April 8th and April 15th, probably around April 12th or so, we're going to be right here at about 182.50. Then it's going to taper off, and it's probably going to move back down. Okay. Now I can also come back here. I'm going to go ahead and zoom out the chart, which is very, very easy to do with the forecaster. And I can actually apply this and look at earlier dates in the history. So for example, if I click on this event, this is the 8th event that happened, I'm going to get that same probability cloud. You'll notice though that it looks slightly different. What we've done with the forecaster, if you overlay this at different parts of the chart, it's going to ignore the data after that. It's going to try and give you a forecast cloud that's very, very similar to what you would have seen if you were looking at it, in this case, back in 2010. And you'll see here we really had a nice little move. It kind of deviated out of this high probability zone, but it nailed it right here. And that's usually, that actually happens quite a bit. So that's what the forecaster is looking to do. The way I use it, I promise to kind of talk a little bit about how I use it, is when I'm looking at events, I'll kind of pay attention to the cloud formation and the cloud intensity. Again, the darker this cloud is, the more likely it is going to be that it's going to be right or correct, the more probable it is. So in other words, if I have a cloud that consists of a lot of yellows, I would pay more attention to that than if I have a cloud that's all blue. With a cloud of blue, that's a 30 to 50% probability. That's really not something that I'm going to be interested in. So in a nutshell, that's what the forecast is. That's what the forecast cloud is. The other way I use it is as a confirmation. So right now I've got a bullish position in DIA, fair disclosure, by the way. And I'm anticipating that that's going to go up in the next few days to plus 4%, which would be very, very nice, and then kind of taper off. So usually what I'm looking at here, and I'm an option trader, our option traders really like this. It gives us time, and it also gives us probability. So if I'm looking at a move to be right around 14 or 15 days, that generally helps me also pick the expiration and how much time value I'm going to want to have there. Okay, there are a few things that you can change. By default, all of the forecast clouds are going to have their own default forecast length. With the stochastics, because it's a shorter term pattern, we forecast that out 30 days, but you can change that to either 90 days or 180 days right here in the chart. The other thing that you can do is you can also look at other patterns, of course, and you can also modify the intensity so that your cloud will only show the brighter spots. And you can just do that by dragging the thing around here. Now that's the forecaster engine. Now I want to kind of talk a lot about what's changed with the forecaster pattern engine. They've actually added with 14, with our new version that just came out, the ability to draw your own patterns. And let me show you how that works. If I come back into my event recognizer library here, I can click on Draw New Pattern. It's an option that's available for me. And a lot of people want to be able to say, okay, well, what happens after a V shape, or what happens after a gap down, or what happens after a W, or a triple top, or a triple bottom? Is that a statistically significant event, and what's likely to happen after that? And with a forecaster, you can now do that. And not only can you do it, it's super easy to do. Let's take the example of the V pattern. So I'm going to name my pattern the V pattern here. Okay. I can include a description right here if I want to. I'm going to look for the shape only, although you can do shape only and shape and location. I'm going to say this is a price pattern that takes about 15 days. I'm going to look for medium match or greater, and I'm going to use a default cloud focus of either 30, 90, or 180 days. And of course, you want to set this to whatever you want. For the purpose of this demo, which isn't rehearsed, I'm actually going to turn the sensitivity down. So that way I can just ensure that I have enough matches to show you how a forecast cloud would work. Now for my V pattern, if I was going to draw a V pattern here, all I need to do is just draw it. I'm just going to use my mouse. I'm just going to draw a V pattern. And I'd probably want to forecast from right about here in my V pattern. So that's where I'm going to stop. I'm just basically going to do a hook pattern. I'm going to go ahead and say, okay, from here I want to be able to forecast out what happens. Okay, now I'm going to go ahead and save this as my V pattern. I'll go ahead and save this right real quick here. So here I have that AV pattern, okay? And now what I'm going to do is I'm actually going to disable all of my events. So I'll just go ahead and turn everything out, and that way I can scan for just this V pattern and see if that's a significant event. So I'm going to go ahead and select this. There's a button in the forecaster that allows me to rescan just the pattern that I've selected, and that's going to go ahead and give me my V pattern. So now that I've drawn that pattern out, you'll be able to see that we've got the blue line here is the pattern that I drew. And the red line is actually the behavior of the chart afterwards. So now I can historically hover over that and just visually identify exactly what happened after that kind of V-hook pattern happened. And in this particular case, I'm seeing a pretty good rise up after the V pattern. It doesn't happen every time, But usually after that happens, we get a nice little hook up. And even without doing a forecast cloud, which we can do, and I'm going to do in a second, I can kind of get a feel for the behavior after that pattern happens. Of course, now I can also click on the forecast cloud, and it's going to give me that same statistical measurement, or the heat map, taking all of the pattern. In this particular case, that event happened 18 times. Every of the 18 times, usually 7 days and 14 days out. By the end of 14 days out, it was about at least 2% higher, followed by a little bit of a straightening out, followed by a drop off of a little bit, and then a continued rise up. So I can see that. And I can also see how that's compared on the chart. So if I go ahead and click on this, I'll get that forecast overlay on my chart. And in this particular case, we've kind of gone down below the probability of the band, but I anticipate we'll kind of be right back up in there in just a few bars or so. So that's really how easy it is to go in and put together a hand-drawn pattern based on a statistical probability. And if I've got that and I wanted to do an inverted analysis of that, I can come back into this V pattern. I can go ahead and edit it just by clicking on Modify Selected Pattern here. And I could basically say Invert Pattern, and I can call it an inverted V pattern. So you only have to even draw it once, and you can take the same shape and the same formation and make it exactly the opposite, which is really, really cool. And I've saved my favorite function for the very, very last. This is something that I use all the time. It's by far my favorite new feature of the forecast, and that's our ability to kind of define a price pattern based on what's happening now in the Dow. The Dow, if you've been following it, right now in April of 2015, it's been a little bit choppy, and I like to be able to see, okay, well, how has this happened before in the past, and what does that mean for prices? And so what I'll do is I'll go ahead and click on this. There's a little box right here. It says User Defined Pattern Selection. I'm going to go ahead and click on that, and what I'm going to do is I'm going to go ahead and draw a square around the price that I want. In this particular case, I'm going to grab maybe just a week or two of data. So I'll get this little shape right here. When I'm done, it's going to ask me if I want to capture the selected price formation as a user-defined pattern. I'll go ahead and click on yes. Okay, and now it's actually drawn that pattern for me. So what I'm going to name this is I'm going to name this Dow on, and just to check my date real quick, April 7th, 2015. You can go ahead and save that as a pattern. And there it is. And you'll see I do this quite a bit, Dow 39, and I have a lot of these patterns that have actually been drawn. I'm going to turn off this AV pattern, and I'm just going to rescan the Dow on April 7th. So I'm going to rescan that selected analysis. And now what I've got is I can see that this event maybe isn't that uncommon. It's actually happened 14 times in the last 1,800 days. And again, like we were doing before, I can kind of measure my pattern. It just matches perfectly because I took it off of this chart. But it also was very similar kind of price behavior back in January. I can see that there was a little bit of a pullback after that. I can do exactly what we were doing with the V patterns. I can kind of identify. This one matched almost perfectly, and we had a bit of a run up to a top and then a pull back down. So even without doing the pattern analysis, looking at the forecast pattern, I can see if there's a general behavior that generally happens after this particular price behavior. Then I can come into my forecast cloud. I can see that we're likely to very much stay in the same area. And within about 30 days, maybe be up to 2% higher, and within 60 days, be just over 2% higher. So let's go ahead and plot that on the chart. We'll go ahead and plot that on the chart to see what that looks like. I do that just by clicking on the forecast cloud. And again, it's going to give us that forecast cloud using all of the patterns and show us what the statistical price likelihood of is over time. Okay, thanks for watching. Again, the MetaStock program has been rated #1 23 years in a row. We're very, very proud of that, and I think you should try it. I hope you enjoy it as much as I do. I wouldn't trade without it. In order to, what I really wanted to do as part of this demo is to get you to take a 2-month free trial that we offer as a special through ChartView. And to take advantage of that offer, just go to www.metastock.com/ChartViewT. If you have any questions, feel free to email me. I'll be happy to answer that. Use a chart view in your subject line, and my email address is jeffrey.gibby@metastock.com.